Hey everybody, hope you all are doing good. So today we're going to do a little portfolio review. We're going to be talking about Disney. They just released their earnings, as well as Intuitive Machines. They also released earnings this morning. And we're also going to talk a little bit about SoFi. So let's just get started. Let's look at our positions right here. So I don't have a large position in Disney. It's a pretty small position in my portfolio. But after this earnings, I should be pretty much break even with them. I feel like they've hit a bottom. The last couple of years have been a transition period for them. They did make some bad decisions, and consistently so. But with how the trajectory of this business is going to continue going, there's no business with stronger IP than them, a more loyal fan base. I definitely don't feel stressed holding this position. So SoFi here is my largest single stock holding. I definitely feel the most confident holding this one. When I started buying, the risk-reward profile was really, really great. I believed I had a ton of upside and very limited downside from the price that I got in. And it's just been one of those companies that I'm very confident in, that they will continue to do very, very well and keep growing. So this company definitely has a very large future ahead of it, and it's just getting started. So here we have Intuitive Machines. It's a smaller position size in my portfolio, mainly because I haven't done as much research on them and I don't have such a high conviction in their company, but it's still a company that I'm willing to keep an eye on and continue to buy as I gain more conviction. So we can see it's a pretty recent buy for me. But they did report earnings today, which were really great, and we're going to take a look at that. So first, we're going to look at Disney. Disney had a literal lost decade. So if you look at the chart, you can buy at the same price as it was in 2015. So almost 10 years of nothing, of just flat performance. So I personally feel this is warranted because of how backwards they were in the last couple of years. They were spending out of control. Their content wasn't very great, to say the least, and they kind of lost focus of what made them special. So all of the growth that they saw from here to 2021 in their peak was basically just evaporated. But I feel like that they found their bottom around here, and they're positioned well to continue to increase their earnings per share, which will drive their share price. So looking at this earnings report, I feel the results weren't that great, but there are some bright spots. So the bright spots here are their streaming services increased a lot. So they have Hulu, ESPN, and their Disney Plus subscriptions, and those have been growing very well, and they turned a profit. So that's going to see continued upside and growth. So since 2020 to 2022, they haven't had much consistent success in their box office numbers, but recently they've had two very successful sequels in very beloved IPs. And I believe that this is a very good sign for their company. One thing that they need to do, and even the consumer knows this, is that they need to keep their costs lower. Even the consumer knows this. They spend so much money on their movies and shows, and much of it is unwarranted because it's on things like reshoots and just poor execution, that they're just throwing money down the drain and hoping that the box office will cover their expenses and take them to profitability. So the next thing is their experiences. Their cruise ships and theme parks, the revenue was basically kind of flat. And that's not surprising because we know that the bulk of travel and revenge spending after COVID was done 2022 to early 2023, really. So now things are starting to cool off in that industry, and we're going to see some consolidation here. And only time will tell if they can improve on their offerings and drive more customers to purchase these experiences. So the reason I'm not selling out of this position and I'm just holding, and I just lowered my average price on this position, is that they are growing their EPS and they're confident that they will be able to do so. So this is always a good sign for shareholders. Increasing their earnings per share gives more value to shareholders and helps them become more profitable and better positioned for the future, as well as lowering their multiples. So we can see that in 2025, they're going to hit high single-digit adjusted EPS growth, and the following years, they're going to hit double-digit EPS growth. So looking at this, I definitely don't mind holding the stock. It's not something that I'm going to sell out of, but it's not something I'm going to add a crazy amount to. So talking about SoFi now, this is my largest single stock holding, and I've been buying it for quite a while now. The thing is, this stock had such a big disconnect between its fundamentals and its share price that it was a no-brainer buy back in the day. Now the share price is, in my opinion, caught up to current fundamentals, and it's fairly priced right now. Some people may argue that fair value currently is much higher or even much lower, but I believe right now the market is pretty accurate and efficient in its pricing for SoFi. One thing to keep in mind with SoFi is it was such a shorted stock, especially when the price was much lower. It was in the 20% to almost 30%, I believe. Because of the recent increase in share price, shorts have had to cover and buy back shares, and I'm sure this percent is much lower than 15% now. Probably I'd guess it's around a 10%. So it's still quite shorted, but not as much as before. One important thing to know about SoFi is they previously were majority retail owned, so just average investors like you and me, but now they've turned to above 50% institutional ownership. So the narrative has changed for this company. It's no longer a meme stock. It's starting to get the respect it deserves. So I have yet to see substantial price target increases for SoFi from analysts, but that's not really important because as the share price increases, the analysts will follow after. So one last thing to keep in mind if you're thinking about selling, taking some profits, which is totally fine, but for me, I'm going to hold for a very, very long time, probably until they pay a dividend, and I'll still be holding and buying. The CEO, Anthony Noto, he believes that SoFi will be a top 10 bank. We can see that they are nowhere near it. Even though this is old data, it's still pretty accurate. They're still in the 60s. So they still have a lot of room to grow. They still have lots of legacy banks and smaller banks with no growth to overtake and climb the ranks, basically. So on to Intuitive Machines. This may become a company that I'll be starting to buy more heavily. They are at a 1 to 2 billion market cap, so much smaller than the other space companies, much smaller. And yet they're working so closely with NASA. They have their contracts, and the totality of those contracts is 4.82 billion. Their market cap is at 1 to 2 billion. So in the future, we may see this market cap increase if they continue to work with NASA and increase their revenues, increase their guidance. So we can see that their revenue has increased substantially year over year, and they are positioned to grow very, very nicely. So I will do more research on this company and see if it's worth increasing my position in a consequential manner. So the thing about these space companies is they're still seen as meme stocks, even though I believe that they've proven themselves that they are not meme stocks anymore, right? Their fundamentals have caught up. Their share prices have increased because of increased optimism and confidence in their business models. And each one of these companies are extremely different. LUNR, Intuitive Machines, Rocket Lab, ASTS. So let's take a look at their institutional ownership on Fintel. LUNR seems to have been increasing nicely, but not in any substantial way. Rocket Lab has been flat, not really substantial in any way either. But ASTS has seen some pretty large moves, and this makes sense because of how many partnerships they have with huge companies, and I believe the other space companies will follow suit because of their performance. So as we continue to invest in companies, we should remember this chart. In terms of small caps and space stocks, I definitely believe that we're in the thrill stage, entering euphoria. So that's not to say that these stocks are going to crash very soon. They're not going to crash tomorrow. It's not a question of if we're in euphoria. It's a question of how long we're going to be in euphoria. So market moves are very dramatic. And what I mean by that is when people are optimistic and euphoric, the prices are going to increase way above where they should be. At the same time, when the market crashes, prices are going to go down way lower than they should be. So this is just a reminder to stick with your strategies, stick with your risk tolerance, and be deliberate with your strategies. So don't just put all your money in one stock just because somebody has said so, or you see that the price is going up. Assess your position, assess your situation, and buy as necessary, and be prepared for any outcome. So that's why buying into good companies is the most important thing that you can do. So as I've been making this video, the market has opened. ASTS is up 5% now in anticipation for earnings this afternoon, which I will be covering. So this is going to be a very important earnings because they've launched up their satellites, 5 of them, and we need guidance for next year. What's going to happen, how their business has been. So this one's going to be a very important one to look out for. LUNR is up 21%. It's pretty great. I think investors are very optimistic about this company. So I will continue to watch it and perhaps add more to it if I see fit. So now we are officially break even with Disney, and I believe it's a good hold for the next coming years. I definitely wouldn't make it a large position in this portfolio, but I definitely don't mind holding it. So I hope this portfolio update and recent earnings helps you guys. If it did help you, please leave a like, please subscribe, and comment. Let me know what you think, and let's connect. All right, take care, everybody. Thank you.